Greetings, Jedi Traders! David here of TradingFibs.com to bring you the market recap and outlook for the week, finishing up April 29th, 2016, week 17 of the market. As always, please seek financial advisory when trading with your money, as these videos are for educational purposes only. Support your knowledge in the market, see what was going through my head on any given day. Always make sure you have a solid trading plan and always manage your stop when placing a trade. What a week we had. Let's actually jump back a week before we get into May here. Last week of April, it was FOMC meeting on Tuesday. Led off with the FOMC meeting announcement on Wednesday, and then Thursday and Friday as we wrapped up with GDP and basically end of the month window dressing. And not to root and toot any bells here, but that's what I was thinking might happen, and that's exactly how it played out as we got into the week. Monday and Tuesday kind of slow days, and then finally Wednesday reaction in one direction, and Thursday finally markets selling off together with Friday's price action, end of the window or end of the month, closing out big managers books. All right, so looking at the trading session focus for the week, as you want to follow me each day at TradingFibs.com, you can here with the daily results as I post them each day, and then towards the Friday, Saturday session, this becomes the weekly results. And there you go, guys. Markets looking at YM, ES, and NQ during regular trading hours, a total of 37 setups, 596 ticks for the week. There's the breakdown on each of the indices. And the trend of the week, that's right, there it was, the crude. As the EIA report came out on Wednesday, I think that was Wednesday. Let's make sure we got our numbers correct there. That's right, Wednesday EIA report. And there it was, 4 charts in the red. As we'll take a look at the big picture, it's the same pick, but looking at the intraday, smaller time frame, there it was, T3 moving averages crossing over on the post results, 534, and the bigger market internals time frame to put you in the trade. Buy signal set up to the upside, pullback, and back to the upside, closing out some upper levels, including the open gap that was up above. We'll go ahead and see that later. And to supplement, complement, keep you in the trend, there it was, the T3 moving average with the 5144 on a 1-minute chart. Together with multitude of trend strategies, whether it's Kiwi trailing stop, multiple moving averages, Kiwi super trend, there it was to the upside, and market action on the crude, there it was, the trend of the week. All right, let's jump right into the futures here as we're going to take a look at ES. Moving into this week, here we are, price action on the ES coming down over the majority of the price action during the week. As we can see, T3 moving averages coming down underneath the 50 and the 144. Here we have a Kiwi or average true range stop. You can use these again on any stock or FX pair or whatever it is that you're trading, but to indicate that the trend truly at this point is in a downtrend, but the bigger overall picture on the ES is still upside, as the 50, the white dashed line, is still to the upside, and the 144 below it. So the trend right now, we have a upwards trend with a pullback, Heikin Ashi bars to the downside. Here we have the multiple moving averages on a 4-hour chart still showing pullback, but still maintaining the upper trend. On the HA Cult study, the oscillating study here for the Heikin Ashi bars, we could see price action now, or the indicator at least in a sell signal, and we'll wait to see once that indicator comes back to the upside. Obviously, we'll see also the HA bars turn back upside. Here we see the ES on a daily as well. T3 moving averages just starting to cross over downside, so still maintaining that price action to the upside. 50 above the 144 as the indicator in the background is green. HA bars, the moving average exponential multiple moving averages to the upside, including the fact that both on the daily and the weekly we are still in a long position. Again, here we see on the weekly T3 moving averages holding upside above the 50-144. Taking a look at the ES based on the gap and the Fibonacci's, we saw price action retrace this week from the highs of last week and 2015 highs. We see price action coming down here to the 23% line and the 50 and the 200 period moving averages just below that. We'll get a little bit later into the open gaps that remain below if price action eventually comes down. Taking a look at the NQ of the four major indices, the T3 moving averages downside together under the 51-44, the average 2 range up above, so supporting this continued downtrend. We have the multiple moving averages downtrend. We have a sustained oscillating a trend here on the Heikin Ashi study, indicating that for the short term, the weekly picture on the NQ was to the downside. Also on the daily, starting to show a trend as HA bars, T3 moving averages have now crossed over, and the 50 period moving average holding underneath the 144, indicating that the daily trend is primarily at this point in a at least in a pullback, but in a downtrend. We are still, though, for the most part, on an oscillating study, still in a long position, as for the most part of March and April we've been in a rally. So HA multiple moving averages still holding above the 200. I'm sorry, I'm thinking of other studies here. The multiple moving averages still holding upside in this trend. Here we have the daily picture again, the weekly picture here with the T3 moving average holding above the 50 and the 144, and again the multiple moving averages holding upside in a sustain. So again, the shorter term picture followed by the daily supporting to the downside, and then the bigger overall picture on the weekly NQ still to the upside. Let's take a look at the gap and the fibs. Here we are on the NQ as price action rose up. Again, leading index of all the four indices to the downside, breaking the 200 and the 50 period moving average, finding support at the 38% fib line. Again, we have open gaps below as well as above. Take a look at the TF Russell. TF again pullback in an upwards trend as we have the T3 moving averages downside, 50 still above the 144 all across the board, pretty much still on a 4-hour chart. Multiple moving averages upside, oscillating study now in a short position, finding support at that 144. The TF found a price action again to hold still on the daily, finding support at the 200 period moving average as the 50 pushing upside, and here on the weekly T3 moving averages holding upside, trend still 50 above the 200, so showing some strength, but again we're getting some side motion here on the weekly, showing indecision, holding position, need to break above that 15 period moving average to get back upside. Again, we'll see the T3 moving averages break back to the upside if the trend will continue in an upwards trend. But at this point, we do have a pullback as well as on the daily, and the weekly still holding to the upside. Let's take a look at the TF on the fibs. Here we are, price action, no fib extension, no fib necessary pullback. We're not even at 23% retracement as price action on a daily finding support at that 200 SMA like we just saw on the daily, 50 MA down below, an open gap down here at 1105. Hey, market can go in either direction, but that's where we are currently. Taking a look at the YM, price action T3 moving average to the downside, sitting in between the upwards trend of the 51-44. Again, we have the multiple moving average study still holding upside, but it's the TF Russell, YM showing the oscillating Heikin Ashi oscillating study that has shown a short position here temporarily. As we can see on the daily and the weekly, we're back to the upside, so not too much of a drop off here, just a couple days, nothing to fret about. YM still holding upside above the 200 and the 50 and the T3 moving average crossover, so the stronger trend still to the upside. On the daily, the YM T3 moving average pulling back, but still pretty strong above the 50 and the 144. Let's take a look at the gap and the fibs on the YM here is price action, not similar picture, not even coming down to 23% yet, as price action pulls back slightly, closes out one of the open gaps here at 656, but still for the most part sitting above the 50 and the 200 period moving average with open gaps below. Let's take a look at the crude as well. There we go. Price action on the crude sitting upside. T3 moving averages to the upside. Price action again sitting 50 above the 144. We have the Heikin Ashi oscillating study still in the green. Still in the green on the daily. Still in the green on the weekly. Still holding above each other. Getting a resurgence here. The daily trying to catch up here. The T3 moving averages upside, but it's the 50 and the 144. As soon as we get that cross, then we have a pretty good confirmation of upside trend. Again, the daily and the weekly on the 50 and the 200 SMA and the 4-hour chart 50, 144, all holding to the upside. Taking a look at one more, let's take a look at the gold also as well. Price action holding upside, T3 moving averages holding upside above the 50, 144. We can see gold all green as we head up to that level. That's right, look at that 13 high. For the most part, weekly still struggling here to get above the 50, well, holding above the 50 now to get above the 200 SMA, but T3 moving averages holding upside as the multiple moving averages holding to the downside. But again, green, all green up here, all green and back to the upside in the gold. And rounding up with the 6E, the euro T3 moving averages on a 4-hour chart holding to the upside, 50 above 144. Also on the daily, we can see the 50 above the 200 SMA, as well as here on the euro, still for the most part, big picture, still downside. The 200 SMA, the euro been in a downside for quite some time now, but again, T3 moving averages finding a pullback, still the bigger picture in a downtrend, but a short-term pullback. True range now below, supporting the shorter term pictures to the upside. All right, let's take a look at the let's go ahead and take a look at the daily big pick here as we take a look at crude. Again, looking out for next week, the crude, good volume this week for the most part, still holding a little bit below the 60 period moving average. Fibonacci extension here, still holding above the 200 MA and the 50 period moving average. Fib extension up above 47.97. Keep that number on your charts. We'll go ahead and take a look at the daily gaps here in a little bit. So another level to keep in mind. Also, T3 moving averages on the 4-hour charts, like we just saw in the bigger picture, holding to the upside, well above the 50 EMA and 144. So at any time that I would see crude to be retracing, obviously that would be on an intraday, but the shorter term picture or for the longer term holders, crude, if unable right now, 2 Heikin Ashi bars, that's 8 hours of indecision right there on the crude. If she were to break here, this T3 moving average come down, I'll look at the first line. I'll look for the 50 EMA down here around 44.16 together with the 200 SMA support. And then at that point, I'll go ahead and draw a Fibonacci retracement. Look for that 50% retracement. Next line down would be the 50 period moving average, including some open gaps which remain open. So we'll get to that in a moment. Let's take a look at the other 3 indices as the NQ coming down here below the 200 and the 50 period moving average, showing well above normal volume, 60 period volume. Again, NQ, we looked at some support this week on the 200 and the 50, unable to hold that. Today, Friday, last day of April, T3 moving averages to the downside, but YM and ES still in an upwards trend. Looking for the 50 SMA as the first line of support, as we've already broken down below the 144. We tried to hold there on Thursday, but Friday follow through broke through those numbers. So the next level's down 50 period moving average and 200 SMA. Let's take a look at the daily gaps here. Again, these are other levels you want to keep in mind. If price action falls from those 144 support levels, you want to take a look down. Let's go ahead and take a look at the YM. We closed out that gap here, 656 on the YM. Again, we still have that open gap down below 838, but nothing major to the downside. So again, when you look at the daily big pick on the YM, it really will be the 50 period moving average what will be the first line in the sand if she's unable to break above the 144 and holds the line. All right, taking a look at the NQ big picture. Again, drawing a Fibonacci retracement. We have open gaps above, as mentioned before. Open gaps below up here at 85, 80.5 and 43.5. Price action retracing to the 38% level today. So again, on the NQ, if price action continues to the downside, unable to hold any other considerable moving averages at this point, I look to the Fibonacci lines for support, looking to 2688. If we break the trend here, 61.8 level at 45.84, it's then and only then that I believe we will close that open gap down below. Yes, 100% guarantee at any given time, markets, especially on the indices, close those open gaps. I challenge anybody on that. Only on the indices I speak of, open gaps all eventually are closed. Taking a look at the ES, so yes, what that means is exactly what I'm saying. Any open gap that I have on my charts will eventually be closed, whether it's to the upside or downside. I can't tell you when it's going to happen. I can just tell you it eventually will. So for all those thinking that this is it, ES is never coming back, I hate to tell you this. I'm sorry, NQ 17 will be a level to be dealt with eventually. Here we are on the ES again, closing out the gap, 58.50 this week. Nice move on the ES again, reaching those 2015 highs. We do have an open gap down here at 51.75 that eventually will be closed. So again, back to the daily pick. There it is, the ES finding the 50 MA would be the first line. We have already broken the 144, so as long as we continue downside, look for those levels, and again, we'll look for a Fibonacci retracement next week if price continues to the downside. Taking a look at the daily crude. As we saw before on the daily crude, again, closing out a major open gap this week from November 5th, 2015. Price action right now headed upwards towards the fib extensions up here. Open gaps do remain below. Oh, I hate the fact that crude might come down at some point, even to the lows here at 29.41. But we do have levels above to deal with, including open gaps all the way upside that we left from last year. But for now, seeking that 47.97 on the fib extension, including the open gaps down below, which eventually crude might come back and close out as well. Other levels that I like to look at during the trading day include the VPOX, major VPOX, 600-day VPOX. Keep these numbers in mind, 17.546 as the YM making its way down here. Again, the NQ finding 42.60, a magnet of sorts. ES down here at 20.61 as price action huddling around that 600-day VPOC as we did back in around April. Again, a cluster around this level, this 600-day volume point of control. Price action breaking back to the upside, but again, couldn't hold to the upside and retraces back to that comfort zone, that level. Crude, again, has a level up above 53.97. Whether we go back and grab that, yet to be seen. So again, big picture, guys, as we lead into next week, you know, back into here we roll into May. Whatever you're thinking, trade the charts in front of you. I always look for the intraday setup first. Regards of what the bigger picture looks like. I don't want to have any bias in my mind. Right now, I know where the trends are. Yes, it's more powerful if the price action is to the downside on the NQ. It supports the downside move. But again, at some point, I would expect for price action to get a pullback. And so I have to leave that to the intraday. But as as any long-term holder or any short-term holder, whether it's options or any market of choice, always looking for the pullback on the T3 moving averages is the option. How do I know the NQ will be back in an uptrend? I'll see it first on the intraday, followed by the crossover on the T3 moving average. I know the levels to look for to the downside, the key Fibonacci levels. I know I've broken through the multiple moving averages. Nothing can tell me where the NQ is going next week until I watch the charts open up on Monday. If I have multiple moving averages like we just showed before, take a look at the NQ on the big picture. If T3 moving averages move back to the upside and I have multiple moving averages supporting the move, then I know that we're moving back as I showed you actually here. Right here, when I have all four major charts in the green, that I know we're headed back to the upside as long as the T3 moving averages will follow through. So again, review the video, look at my charts. You'll see the levels here. Mark them on your charts. Nothing can tell me where we're headed next week until actually the market opens. Here we go, Econoday for next week, rolling into May, first week of May. There we are. Multiple Fed speakers coming up. Keynote employment non-farm payrolls at the end of the week. That should be a mover. Always looking for crude report midweek to move things. Jobless claims on Thursday. And any key global announcements, keep your head open for those as well. Taking a look at my website each week. I wrap things up here in the market outlook. I always post this video here for you to review, including the weekly supplemental long word here that I haven't shortened at any point yet, but this weekly supplemental, the momentum outlook charts like you just saw for the futures. I'll go ahead and review a variety of markets, including the ETF futures, key indices, all the way down to the total stock market index. So that would be a supplemental video that you want to catch here. Again, giving my brief outlook for the week, what I'm looking ahead. You can view that here at tradingfibs.com, where you can always review the trading session focus for the week, including the market cap leaders. All right, Jedi traders, I believe that concludes an insight into the market outlook and recap for week 17. As we head into week 18, May 2016, feel free to stop by tradingfibs.com or any of my social media outlets to obtain more information. My mantra of one simple strategy: any market, any chart, any time frame will keep you disciplined. You can find me every day on Twitter at TradingFibs. And as always, I leave the crystal ball to the experts. I only trade what's in front of me and on my charts, and always I leave the bias at the door when trading. Have yourselves a wonderful week, a Blue Zone week, as we enter into May. Good day, good night, and good trading to you.